All right, let's get a perspective on that. James Hughes, Senior Markets Analyst at Alpari, joins us on the show right now. James, good to have you on the show. What is your assessment, day two, in reaction to what the ECB chief had to say and how the market is taking to it?
Well, I mean, I don't think it's necessarily too much of a surprise, and of course it's not the first time we've come out and heard any official at the ECB or the IMF or from any of these stricken countries saying they're willing to do whatever it takes to solve the problem. I mean, we've had the ECB saying they're willing to do whatever it takes to solve the problem for the last 2 years, and that's all well and good, but if you don't know how to solve the problem, of course, then the problem is still there. So there's so many issues that still run deep. I think the reason we get getting such a positive market reaction, of course we've got a positive market reaction in the euro, was because the euro had been so weak up until that. The last couple of weeks or so, we've seen so much negativity running through it. I mean, there is positive steps within this, and it's, as you say, his maybe strongest speech to date about the fact that they want to do whatever it takes to solve this issue. But I think there are so many. We're still so far away from it, and we've been going down this road for so long now that I think it's very hard to be anything but a little bit sceptical when you hear these sorts of comments.
So, what's the expectation really from the market over the next month or so? There is, of course, much talk about how a QE3 is in the offing. What do you think the market would do in the interim? Would there be a rally? There is some opinion that there could be a peak for 2012 made in August. Do you subscribe to that view?
Yeah, I think so. I mean, we are around an area where we are seeing maybe a little bit more in the way of positive rumblings coming out of a few of these officials, and of course the talk of QE3, the talk of... but that is then offset by the fact that you look towards what's going on in Spain, and the fact that we've seen the fact that we're most probably going to look for a full bailout for Spain in the end. It seems to be inevitable now, and of course you've still got the issues hanging over the fact that Greece may not get their next round of bailout cash. I mean, those issues make it very hard to see the market making much in the way of ground. I mean, if it's going to make ground, it's going to be recovery from what we're seeing, from negativity we've seen recently, but I don't think we're going to necessarily make too much ground to the upside past that.
James Hughes, thanks for joining in with that perspective on European markets.